What's up, y'all? It is Bella, backtesting with Bella, Trading Bay. So, today I'm going to tell you why the supply and demand strategy sucks and why you should use order blocks and liquidity instead. But before I get into this video, like, comment, and subscribe. Comment in the comment section because I engage with everyone, and stay tuned into this video for at least like 6 minutes because y'all get the answers that y'all need and then y'all get off the video, and that's messing up my algorithm. Okay, so let me go ahead and get into the video. So first things first, I just want to mark off a couple of rules when using this strategy. So when you're trading order blocks, you want to use it on a higher time frame. The time frames you want to use is the 1 day and the 4-hour time frame. Intraday trading, you can use a 1-hour time frame, but for me, I just want to focus on the overall picture. The second thing you want to look for is a draw on liquidity. It can be sell side or buy side. Or buy side liquidity in the market. Number 3, you want to enter on an order block retest, or it can be a displacement. So like a displacement near order block. So like a fair value gap near order block. So I'll put that here. So everyone always like, oh, why do you enter on a higher time frame? Wouldn't that take a long time? You can literally enter on a higher time frame and your day can still be a day trade. Like your trade can still be a day trade. Just because you're entering from a higher time frame, it doesn't necessarily mean like, okay, you're gonna be in this trade for weeks. Like, no, you're just catching an overall stronger move. So don't be afraid of the higher time frame. If anything, I feel like you should be afraid of the lower time frames, because the lower time frames, it's not an overall bias, and then like you'll just be in the market for no reason. So I'm just gonna go ahead and get into replay mode from this point here. So the first thing that I do start with is a line graph. On that line graph, what I will do is I would mark off highs and lows. So highs and lows basically around order blocks in the market. So I'll show you guys what it looks like. Just go here to a line graph. My line graph is pink. You'll see here, I'll draw a demand area at that order block. I want to draw a demand area here too. I'll draw demand at this order block. I would draw another demand here at this bullish order block. I would draw a supply order block here. And then I'll just keep it as simple as that. So now from here, I'm going to go back to the candlesticks. So now what I see here is that the market has taken out sell side liquidity. So from this point, sell side liquidity is taken from this point as well. And also from this point here. Now the market's trading back into a demand zone. So what can happen here at this point is the market can go back bullish. It also had a bullish breaker. So there was a bullish market shift here. So the market is doing this. can go all the way back towards these highs. And I'll add it in the notes what a bullish breaker looks like. Let's make this line orange. This is a bullish breaker. So now from this point, the market can trade back bullish. Which I'll delete some of these lines so you guys can see clear. You pretty much see how the market's bouncing from a demand area on a daily chart. So even if you were in this trade for one day, you don't have to swing trade it. You can take your profits and go. Even if you ran from this day, you can hold your trade for a couple hours and be profitable in the market. It's a bullish day, bouncing from a demand zone. Now, the market is coming back towards a sell area, so it can possibly sell off from this point here. The market can possibly sell off. So I see that it's taking out some buy-side liquidity, but I want to see the next candle sell. Okay. Let's give it a little bit of chop here. Okay then, so never mind. The market just wants to go completely towards these highs. So I'm going to go ahead and turn my graph back to a line graph. And I'm going to put a new key zone there. So target is all the way back towards buy-side liquidity. So I do see a order block followed by a fair value gap, but the market is rejecting from this. But buy-side liquidity needs to be taken out from this point here before sales can actually be valid. Because if I just traded it like this with no buy-side liquidity taken, like sometimes there'll be a double top or a double bottom, but most times liquidity is taken. So I actually want to see liquidity taken first before I'm like, okay, I'm looking for sales. Alright, so the market needs to continue on bullish. Anyways, this is one of my favorite strategies. Order block followed by a fair value gap. So that is extra confirmation for me that the market's going to trade above buy-side liquidity. As you guys can see, it did. Anyone who knows me know that this is my favorite strategy. So now buy-side liquidity is being completely taken off. So from any moment, the market can go back short. But I have to look at a higher time frame. Okay, this is the highest. Okay, cool. Alright, cool. But the market can go back short from this point here. So you guys can see the market is going back short. But this is a new zone here, so you have to be patient. So you can mark this new zone here, this new supply area. But you want to wait on the order block retracement. I wouldn't trade this first one here. Maybe on a lower time frame. You'll see more selling momentum easily. But looking at the daily time frame, you want to wait until there is a retracement. So when the order block retraces back to this selling order block, then the market can go back bearish. So I'm just going to wait until there's a retracement. So there's a retracement happening here. So buy side liquidity was taken. Snap. Now the market's kind of creating bearish momentum. So from this point here, I'm gonna go to the 1 hour time frame, a lower time frame, to see exactly. So you see on a 1 hour time frame, below here is already created a bearish order block, bearish fair value gap. But my retracement is still coming from the daily time frame. So from this point here. So I am thinking the market's going to trade lower. So a bit of a 1 hour demand, but this is still a daily supply zone here. This is still a daily bearish order block. And you guys can see the market's just trading lower. So now from these key points here, I'll have a target. This first target, second target, third target, just targets all the way back down towards sell side liquidity. So let's see. It's kind of could be a demand zone here, but we'll see. Alright, so I'm actually just going to chill from this point and wait completely until the market gets back towards this supply area to see if it sells off for real this time. So kind of like from this point down lower. So this is where patience comes in the market. I see a bullish order block and a bullish fair value gap. but the market can reject from this daily supply zone back towards sell side liquidity. So you guys see this up here would have been an entry for sales. The reason why is because it's coming from a daily supply zone, and then it created a bearish fair value gap and a bearish order block. So until this candlestick just popped back up, I was thinking the market can go all the way down towards sell side liquidity. But what can happen is the market can possibly bounce again from this area. So the market may play in a range. But you guys can see what happened here. So if the market's playing in a range, now that it's back up here, it can possibly sell off again. It's back at the daily supply. So you guys see it's pretty much, oh, well, I thought it was selling off, but guess not. But if you guys like this video, like, comment, and subscribe, and engage in the comment section, I guess. But I'm out until next time.